Hello Asante, how are you doing? I hope you're fine and doing well. Let us get into the trading strategy number one. This is a very simple strategy. It is the double moving average cross, and this is what you need. Indicators that are required are now 10 EMA and 20 EMA. Okay, the 10 is gonna be your yellow and 20 is gonna be red. All right. Now some people they like using 13 EMA plus 21. Some like 15 plus 30. Okay, I prefer 10 to 20 moving average. Okay, and like always the time frame we're gonna use is H4 and daily. That's our time frame. What else? Markets, recommended markets are oil, GBP USD, GBP JPY, gold. Okay, these are the best four most recommended markets. And what is the strategy? First, if you don't know how to add the moving averages, you go to insert, indicators, go to trend. Here you'll see moving average. Go to moving average, select here 10, keep MA method exponential, apply to close. Always choose apply to close and yellow. Then you'll have this moving average here. Let us make it a little bit dark. Okay, same goes for 20 moving average. Same way, you go to insert, indicators, trend, moving average, select period 20, MA method is exponential, apply to close, keep the thickness to the second level. Now there are so many ways to trade this strategy. Okay, let us look at the first method. Okay, method 1, M1. This is not minute 1, it's method 1. Enter upon cross. Upon cross. What do I mean by enter upon cross? Yellow above, red is buy, yellow below, red is sell. Now this is a 4-hour chart. We have a yellow moving average crossing below the red moving average. Wait for the Japanese candlestick to close. This candle should close before you hit a sell button. Okay, you take a sell trade. If you want to put a stop loss, you can put at the previous high here. But if you I don't because we're using 0.25% risk, we don't really need to put a stop loss. If you're using 1%, 2% risk, then it's better to put a stop loss over here. Okay, so this is your stop loss. This is your entry. Here, this is a cross. Here's a cross. This would be your entry. Okay, now once you enter here, you can hold on to the trade and see how far it goes. It goes very much deep. It goes too much down. So let us say the stop loss is almost like 259 pips, but the move is going 510 pips. Okay, this is one way to short sell and enjoy. What is the other way? How do you now you know how to enter a short trade? Let's look at the buy trade. How to enter the buy. This is a buy example here. Okay, the yellow crosses above the red moving average. Your stop loss is here below the swing low. Okay, this is the cross here. You take a buy trade and continue to you can continue towards the upside and make all your money as long as the market keeps on trending. Now this is, see, it's very simple and easy, no headache. How big is the move? Let us say stop loss is 229. It's like almost 0.75% risk or 0.6% risk, but when it goes up you're making like 1% gain in account in 1.5 weeks. Not bad. Yeah. Now, what are the side effects or what are the disadvantages of the strategy? If the market is sideways, it's going to give you a lot of headaches. Now, here's another good example. Here, yellow below the red, candle close, short sell, we make good money, right? This is a very nice trade. Stop loss is here. This is your entry. Cross happened here. Below the string low. Look how nice it is. Okay. This is the entry. How do we exit? Simple. When the yellow will cross above the red, opposite signal triggers, you exit and reverse the trade. See that? How nice it is? So here you have a move. If you took this one, it's a 600 pips move. Although it took around 3 weeks, but it's good. 600 pips, it's 1.5%. Then it takes another 3 weeks to give you 475 pips. You see, 3 to 4% with the least headache, and in a month you make 4%. It's really nice gain, and next month you can increase your lot size and play however you want. Now, where is the problem? The problem happens when you have a sideways market like this. You see, this is a sideways market, and when the market's not trending, it's really pain in the butt. So we have a cross here. I would enter here, okay, and then I'm getting confused here. We have two options. Either we stick with our buy, okay, and be patient and let the trade reverse or hit our stop loss, which should be below the previous swing low, okay, or we can open both, buy and sell. I buy here, let it ride, and I sell it here. It's open. Next time when the market reverses, I can short sell to make recover money again. You see that? So what do you do? If you have a sideways range, either ignore or take your trade, follow your signal, have minimum 1 buy, maximum 2, and trade in the opposite direction. Not an issue. Look how beautiful this is. Again, issue here. Now here we have a cross, clear cross. This one is fine, but this sideways here, chop and slop, chop and slop. So the drawback is it's not good for sideways market. So let us write here. Not good in sideways markets. Now there's a trick. What's the trick to trade the sideways market? Here, let us say we have a sideways market, okay? What you do is you draw your support. Okay, this is a sideways market. Let us take this example here, and this is the high. Okay, if we have a yellow cross, it's confirmed. What we can take is when the breakout happens, then we can take a buy. Okay, and if we have a bearish cross, yellow below the red, we can let the support break and then we can take a short sell. I hope you understand this point. I'll repeat it again. Let's take another example. This is a sideways market. See how much headache here? I would ignore. If there's a very big distance, you should skip the trade. Just be relaxed. Okay, here's a sideways range. Let the market try to break below the sideways range. See, bottom line is in sideways range, this will give you a lot of headache. If this is a sideways range, I took one buy trade here. I can hold it, and I would reverse trade here. Okay, but do not open multiple trades. Have maximum 2 buys and maximum 2 sells, not more than that, and play it smart. Be patient. Give it a week or two, 1 week or 5 days, 4 days for the trade to work out. All right, buddy. So is this clear? I hope it's clear. Now, how do you extract the maximum juice? How do you make it much better? How do you optimize the strategy? You can add another indicator. It's called, you go to indicators, go to customs, select here awesome oscillator, or a awesome here. Select awesome here, colors, increase the thickness, increase the width to Leave black how it is. Let's change this to line. Okay, click OK. You see that? Now, how do you use the awesome oscillator? When we have a yellow moving average crossing below the red, and the awesome oscillator here is below the zero line here, you see the zero line? This is your good chance to take a short sell. Okay, similar is valid for the buy trade. We have a moving average cross, yellow above the red, awesome oscillator crossing above the zero line, take a buy trade. So you can use awesome oscillator for verification. Above zero means market's trending towards the upside, below zero means market's trending towards the downside. Okay, this is the moving average cross strategy. This is part 1. I'll send you part 2 shortly.